All right, everything looking good. We are live. Let's go ahead and get this stream started. Welcome back to the channel, Crypto Trend Trader, with our Sunday evening market look ahead. It is 8 p.m. Eastern Standard Time on April 9th, 2023. And as always, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, let's go ahead and jump right in. Happy Easter for those who celebrate. Hopefully you spent some time with your family, enjoyed a little time away from the markets, and ready to start back at it fresh tomorrow. All right, so we do have TNX here first. So we broke down to that new low, cruising down here. We're starting to look like we basically had that initial descending channel right here, but we might want to look out for something along, you know what, actually, I might want to look out for something along those lines, but sort of with this area as the top and just kind of see how that pans out. See, I could see this go something around that. So let's just get rid of this channel here for a second. And then we'll turn this one white. And now we can see we're basically bouncing off the bottom, the heart line, the bottom double touch, all the way to the top, back to the bottom, heart line again. So the real question is, you know, are we at the bottom of the range and we're going to break down from here and get a real big move to the downside? Or are we at the bottom of the range and we're getting ready to bounce from here? Well, we see we had exited the bullish control zone and got the hard buy. We popped up a little bit and back tested this cluster of resistance, and then it failed. It looks like it's rolling over. So while my normal strategy is to just trade the range, when we're inside of a range, I would rather just buy support at the bottom of the range and sell resistance at the top. You can make an argument that this is going to break down from here. And that would likely give us the measure move right around like that 2.27 range. So if we just take from the top of the channel to the bottom of the channel, and then we just had a bearish breakdown. Let's just say this was going to be the one time it ever breaks, because every other time it's just going to bounce until it breaks once. So let's say this is going to be the one time it breaks. Measure move would take us down to around that 2.5 to 2.75 range. So maybe it's going to happen. We'll see. Let's see what everything else is telling us. So here's the VIX on the daily. Again, we have that same kind of channel, descending channel here, and we're back towards the bottom of the channel again. VIX is relatively beat up here. Normally, we know what the VIX does. It oscillates within a range. Right now, that range is this descending channel. So again, when we're at the bottom of the channel, that means equities are performing well. There's less volatility. It's one-way directional buying. You know, the volatility represents people not knowing, the market not having a defined direction. So people are buying and selling. The volatility goes away when the market's just calm in one direction, typically to the upside. So when we're at the bottom of the range here, we know assets have probably been doing well. And when this bounces or spikes to the upside, it means assets probably are selling off. We're all the way at the bottom of the range. Bears are in full control here. We're almost down at 0. I mean, we normally bounce from around this level. That was at 3. We bounced that previous one. Right now, we're basically at like 1.9. The previous low down here is at 2.2. So, I mean, we're down at the levels where we would expect a bounce. And a lot of people probably, we'll see. We'll see how it plays out. So oil, we got that big spike back up. But we're really just trading back inside that same range. So, yeah, we did get lucky. We did hit the squigglies. We backtested the 236. We bounced off the exact area. But it was all pretty clear what was going to happen here. I mean, there's only a couple lines on this chart, so it's easy to figure out what we're going to react to. And now, you know, we're basically backtesting that channel, surging back up to the channel at resistance. We had the 200 exponential, the 200 simple, the 236, the heart line of the channel. It's all right here. So we'll see what happens. If we break back down from this range, likely retest the bottom here. If we start consolidating back above those resistances, above the moving averages, they start flattening back out, flipping back to the upside, oil could be ready to go back in a bull run. And, you know, we got to let the market tell us because we really don't know. Dow Jones, still getting that push back up, looking more and more like the inverted head and shoulders we've been discussing here. So the real question is going to be, do we take out these highs here? Because we have like a slightly slanted neckline where we had come up and put in slightly higher highs. So again, if we come up here, slightly higher high around 35,000, let's call it. And then the measure move breakout from the head to the neckline is off the charts, literally. SPY back above the 200 exponential and simple. Both are blue. We had a nice little run up here on the stochastics. Nice little move up on the TDMACD as well. Now here we are banging our head on some resistance here. We've got to look out for some bearish divergence potentially developing here, but looks fine to me. This is essentially what you want to see at the start of a bull run. Is it possible we break back down from here and this fails? For sure, definitely is. But right now it looks okay. So once again, we see the squiggles playing out very nicely. They have like a 100% success rate on squiggles. So when you see them, you best respect them. So what if we get rid of this guy right here, or just kind of mess with that a little bit? Start looking at this a little more in the broad sense. So if we connect these two lows right here, and then we take our high right here, we didn't quite get to it here, so it's not perfect or anything, but we can see some kind of reactions around the heart line. That's basically where we're at right now. So support again would be this bottom ascending line, and then resistance, we're actually kind of banging our head on these previous two highs, and then also that heart line. So we have a little cluster right here. Staying above this area or getting above 413 would be real nice for this, and potentially see that continuation of our measure move from the descending broadening wedge, which is just like the breakout of the range. Triple Qs basically just put in a new high, so consistently putting in higher highs and higher lows, at least on the short term down here. I mean, even on the daily, but like, you know, just looking at the shorter, man, we'll go through and clean some of these charts up here. We did have a nice run up here. We are potentially printing some bearish divergence, so the Q is not looking quite as good. IWM next, looking very, very weak, substantially lower below the 200 exponential and simple. Not really getting that same kind of move and excitement, probably just because it's a bunch of zombie companies, so not really surprising. XLE got the little pop up here. Again, one of those gap up situations where you really got to look out for that quick move down to close the gap. But as far as I'm concerned, you know, that's potential buying opportunity. I do think there's still a lot of risk for a deeper retracement, but we'll see what happens with the underlying oil as well. And then we did talk about this last week here. This is on the daily. They hadn't updated it yet on Wednesday's stream. It is every Wednesday. But we did get, this was our previous tick, 8,705,000,000 on the, I'm sorry, 8 billion. That's chump change. Trillion. 8,705,942,000,000 on the Fed's balance sheet. And that was that tick down from 8.733. And then we saw an even bigger tick down this week here. So for, you know, essentially the idea being that rates had topped out, balance sheet had topped out. It's coming down, slowly selling off consistently. Nice little move back down. And then we had that burst up here when the banks failed. A bunch of money coming into the Federal Reserve. And then, you know, going on to their balance sheet. And then we see them continuing the trajectory, the downside trajectory. Obviously, we have this little hiccup, this little bump, but continuing it. And then actually we see acceleration between last week and this week. So realistically, at the peak here, the Fed had, we'll call it 9 trillion. It's 8.965 trillion. And then at the trough here, the recent trough prior to the banking failure, it was at 8.339. So 8.339, and then we burst to the upside, 8.733. So almost $100 billion. No, that's not right. Almost $400 billion on the Fed's balance sheet. And then we dropped down from 8.733 down to 8.633. So 400 billion just got added, and then 100 billion is already off in the 2 weeks following. So we'll see what happens. It's probably not going to be as much going forward, but I would expect the trajectory to continue to the downside, in which case, you know, they basically succeeded. There was trouble in the markets. They fixed the trouble, and now they can continue with the tightness. So playing out very nicely, as expected. So DXY is next. So this is what we're going to pay attention to here. I really got to look out for this DXY because I do think that there is a short squeeze incoming, getting ready to have a little burst to the upside. And the reason I say that is this thing is beat down. It has printed some bullish divergence, had a nice little back test up to the 200s here. But now here we are coming back down to the lows again. We have a slightly higher low right now. We could easily roll back over and continue lower, but we're seeing we're coming out of the bearish control zone. We're getting the hard buy signal. So we're very close to getting that basically confirmation there. The last time we got it, the time before that when we got it, this one was a little bit lackluster, but here we got a decent little run up. So what we're thinking is the potential that we come back up here, only this time we tag the 200 simple, get rejected, and then go lower. It is possible, obviously, go to the upside. It is possible we just continue to the downside. But that's the move I'm looking out for, with some potential for, obviously seeing an inverse move on risk on assets. So we do for now, though, have a low and then a slightly higher low on the stochastics. And we have a low and a higher low on price action. But if we did see one more push to the downside, break down through this, and then we could print some potential bullish divergence, or we could see a much deeper move down here to one of our other key fib levels. But right now we're seeing some exhaustion and the potential of at least some kind of upside bullish move. Maybe it'll be rather lackluster, and then the air will keep coming out of the dollar. I think that's good for risk on. So that makes our lives a lot easier. So Tesla is next. We are looking at this little double top scenario, basically banging up against the moving averages. And then obviously we're seeing the slope line roll over on the TDMACD. We're seeing the hard sell signal and the stochastics rolling over as well. Does look like it's going to come down here and test support about 167, at which point in time, I'm really looking for that breakdown here. So from the bottom to the top here, we came down initially to the 382. We put in a lower high here, and then we come down to 236. Next target is the 0.5. That's going to be a break of the neckline. That's going to be a retest of this descending channel that has acted as support quite a bit. So obviously we scalped it back to the upside here. We're out of the trade for now. I'm looking to potentially re-enter somewhere around like that 149 rather level. We don't want to get too ahead of ourselves with this though, because we could see a much deeper retrace depending on how the markets are looking at the time. But I'm looking at something along the lines here. Basically an entry around the 0.5 at 150, 149. Somewhere around like an 11% stop loss. I want it below the 6.618 in white. And then I'm looking for a target essentially at the top of the range, depending on how long it takes to get down here and back to the top, the slope line on this going down. But that gives us 11.4% stop loss, 53% upside, and 4.69 risk reward ratio. We do see, obviously, though, we're losing that momentum. So we have to see how much of this gets used up. How much of our range gets used up? Do we come all the way back down to the bearish control zone and that's where we bounce support? Or how's that going to look? But, that's the area we're targeting for now. So Microsoft had an aggressive day up here, put in a new high close on this entire cycle and back testing that very, very key previous top back here. So getting into or around that is very, very strong. We're now not far off the highs again. And the next level, if we break through the 618, if we break through this ascending channel, very likely taking us up to 786 around 314. We are using up quite a bit of our momentum here, but this is starting to look bullish. I mean, we're above the 200s. They're both obviously blue at this point in time. I mean, we're not looking like, this was like scalp bullish through here. This is looking like, basically like approaching all-time high, new bull market bullish. But the key here to pay attention to is this whole pattern is actually very bearish. It looks like it's bullish at a glance or when we talk about it on a short-term time frame, but this is what we're really looking out for. And I will make this a little bit darker. This is what we're really looking out for. What if we change this to white? Because there's already a bunch of red on here. Something along these lines is what I would expect to happen, because we see a like descending channel consolidation, a breakout measure move to the upside, which we're getting close to. We don't know if it's going to top here at the 618. Maybe that was the top. We don't know if it's going to get up to the 786 if that's the top. We don't know what's going to happen, obviously. But that initial move down here took us to the 0.5 in green. I still think there's a probability we get to the 618 in green right here, or possibly even lower to like the blue macro 236. Now we'll have to see how it plays out. But that's our typical A, B, C correction. And this would be, a pretty aggressive B. But that's the market saying, oh, actually, maybe tech's going to be okay through this. They'll be able to grow earnings because of subscription models or, whatever. So we'll see. Somewhere around this area, though, is where I would be expecting the market to top out for Microsoft if we're going to presume, or resume rather, the downside trend, which maybe we don't. Apple, a lot of the same stuff going on here, testing that resistance up here at the top of the range. We talked about the potential short scenario right here on Apple. I don't really like shorting Apple just because it's so strong. I would rather like beat up on some of the old wounded warriors. But 5.5% stop loss from basically where we're at right now, 14% downside. So we'll see. And there's, I mean, depending what happens here, we're very close to printing some bearish divergence between these 2 points as well. And then on longer time frames, I mean, honestly, a lot of this stuff is starting to build momentum and starting to look okay. Now, it doesn't mean it's not going to be a fake out lower high before we go much lower, but momentum-wise, starting to look pretty good. Google, same thing, back on top of the 200 exponential and simple. Looks like we're going to finish out this measure move to the upside as we just put in, again, a new high here since our downtrend. Now we're putting in higher highs and higher lows along the way. What if we just flip this over to a channel and do a little something like this? You know, depending on how we're looking at that little top right there, or if we're going to look at it right here, this looks like around the area it might have some troubles. So we'll see, because obviously you could draw the channel with this as your peak right here, probably how you should. And then maybe it's got a little bit more legs to go. It could kind of consolidate here to the upside, but looks like it wants to hit our 117 target. So nice trade setup playing out here. Back on top of the 200s. Back on top of the heart line. I mean, this is about to flip bullish. So it is lagging behind a lot of the other stuff, but I mean, this is what it starts to look like when something looks bullish. When we're below the red slope lines on the 200s, we're bearish. When we're above them, we're bullish. It's just simple as that. And then we can do whatever else we want on top of that, but keep it simple. So Meta still very strong here, back testing that key 618 area. If this was going to top out, this is around the area I would expect it to top out. It does still have this big gap left behind here. So we'll see. Maybe it doesn't ever come back and fill it. Usually what happens is bullish gap up or explosion to the upside. Look what we saw in Bitcoin. A little bit of a pullback, gets bought up aggressively, pushes higher, eventually runs out of buyers, breaks back down, closes the gap, retests the 200 exponential and simple, and then from there we can potentially get a legit bull trend. Amazon lagging behind, still looking very weak. Obviously it's been pretty weak here, but getting back above 108, and it's going to be in the same situation as a lot of these other tech stocks. Back to where, you know, arguably we are bullish, back above the 200s with blue slope. Keep it simple. All right, let's look at some cryptos. All right, so Bitcoin on the daily Bitstamp chart here. Again, exactly what we're talking about. We get the bullish explosion to the upside, back test the 200 exponential, push higher, back test the 200 simple, and then after that, we really get an aggressive move to the upside. Now here we're consolidating at resistance. I mean, I'm still bullish right here. We're above the 200s. There's slope to the upside. We're basically seeing a bunch of our indicator oscillators cool down. All this red right here, and what is priced on? It's done nothing. It just went sideways here. So it does look a lot like a double top right here, but you know what? A double top could just be a consolidation inside a range before it breaks out to the upside, and then this is going to look like a bull flag or pennant or something along those lines. So this is the area we would expect to see a bounce when the histogram comes down and touches the slope line. So I'm expecting that bounce very soon. We did see a little bit of a move earlier, but that's not really what I was talking about. I was talking about something a little more aggressive. Push to the upside, potentially some bearish divergence, a little bit of confluence, and then maybe that retest of 25K, still my target. But again, we see these stochastics coming down, the histogram coming down, and the price action just going sideways. I mean, that is bullish. That's a bullish reset in full effect. Bitcoin futures chart, nothing really to say here. We're at that same level on the histogram. We did get a hard sell right here. Again, just kind of consolidating. We do still have a little gap down here. It's not that serious, around 20K. I'm not sure we get back down to it. A test of 25K though, basically just to test that previous top. It seems most likely short to medium term. And then maybe, sure, 30, 35, 50. Maybe we go to 30 first and then back to 25 and then up to 50. We'll see. Maybe 50 is not even in the cards and 7 is. I don't know. Ethereum looking a little more bullish these last few days as it's like taking out the highs, and we're not really seeing that on a lot of the other cryptos. This is a key level to get through for Ethereum is $2,000, $1,999. But since we came down here, We've been putting in higher lows, very good sign. And then taking out this previous high right here since the macro low, that's our highest high. So taking out that highest high with a bunch of higher lows above the 200s, blue slope line. I mean, Ethereum looks bullish. Total market cap consolidating back above all that resistance in the form of the moving averages. Obviously, a lot of momentum to the upside, hard buy all the way up to the bullish control zone. Bulls are in control still. We're at resistance. Couldn't get through it back here. Trying to get through it here. Consolidating at resistance. Typically a bullish sign. We know the big move from $1.15 trillion market cap in crypto, digital internet money. The next big move up here is 1.77 trillion. So roughly half a trillion, 500 billion in market cap increase. Does it happen? I don't know. Probably it's either 0 or 1.77 trillion. You guys can hold me to that. Market cap either goes to 0 or 1.77 trillion. Now, I'm not going to give you a time frame though. Bitcoin dominance on the weekly. So we see again just banging up against the top of that channel. So we see a very, very clear, very, very defined channel right here. You guys know how we do it. We trade the range. We buy support, aka Bitcoin dominance at the bottom of the channel, and we sell resistance, aka Bitcoin dominance at the top of the channel. So if we're going to sell resistance at the top of the channel, we think that Bitcoin's going to break down from here. That means altcoins are going to break out relative to Bitcoin or gain market cap, which means either people are de-risking and stable coins are what's making, us break down from here, or they are going all in on whatever, insert random trash coin name here. So we'll see which one that is. Obviously, if Bitcoin breaks out, neither one of those things needs to be true. But more likely than not, we're just going to keep trading the range. So if we take the stable coins out of the picture here, we get a little different of a scene. We had that clear channel. We broke out here, and then we've been putting in ascending support ever since. So we got a little more room to the upside. So this tells us maybe Bitcoin is going to gain relative to alts. So what scenario would Bitcoin gain relative to alts? That would be probably either a bullish explosion to the upside led by Bitcoin, where alts are lagging, or a breakdown and Bitcoin holds up better than altcoins do. So if that is the case, then that tells us, potentially what could happen is people de-risk in crypto. So they pull money out of crypto into stablecoins, and they pull it out of altcoins faster than Bitcoin. But we'll see. We'll see. So XRP consolidating after that breakup here. Again, same thing. Bunch of red histograms, bunch of energy spent to the downside, and it's just going sideways. Took out that previous high from right here. I mean, it looks like it wants to go higher. Let's just put on one from the top to the bottom. Man, there's a lot going on here. Let's just delete everything. All right, let's try that again. So yeah, that was our 382 touch basically. So if we are going to continue to the upside, we're looking for something about like 75 cents. Potentially, maybe one day. Probably goes to 0 though. BNB consolidating above the 200s. Looking pretty weak lately. BNB, it's consolidating above the 200s. It looks a lot like a little double top action going right here. The key that we're paying attention to is higher lows. That is good. We're above the 200s and they have a blue slope. That is good. We see clear interactions with our Fibonacci's. So that's our macro low to our macro high. We see some pretty clear interactions at the 236, some at the 382, and then obviously we topped out right here at the 0.5. So the next target to the upside, if this wants to move up, is the 618 and a slightly higher high. Now we almost got there with this crazy scam wick. So obviously the market was looking at that 408 level, which is also the top of our ascending channel as well. So bullish, I'm looking for like 408. Bearish, I would say just the bottom of the ascending channel and the 236. So maybe somewhere closer to like 265. So a big range. A big range. And then, let's say, I don't want to say worst case scenario, but let's say, it did decide it was going to break down from here. What we would be looking for is basically a measure move from our little double top to our neckline here, and then the breakdown from that level. obviously the breakout is like very, very clear. So this would be essentially our neckline. And then if we lost that neckline to breakdown, and that would take us outside the channel. So this is, you know, basically like the catastrophic potential breakdown of BNB. This is if like, you know, CZ gets picked up by like the authorities or something like that for partying too hard or whatever, or like telling people things were SAFU when they're not. You know, that was potentially the retest of the lows. So if we break down from that little double top, and then we break down from our little ascending channel, the measure move would take us down here essentially to new lows, and that ends up being our basic air pocket. So that would be that catastrophic scenario. And then obviously it's, you know, we don't need to be scientists to figure out like the upside scenario. Please keep in mind, I'm not taking this trade. I have no interest in this trade or anything. I'm just saying we would have the potential move up here about 30% to the upside. And then obviously, you know, the key level of breakdown would be that low where you don't want to be in this anymore. But that's down 13%. So that's not realistic. Realistically, you would probably manage risk off the 382 or the 200s right here. You get closer to like 6.5% stop loss with 30% upside, giving you about a 5-to-1 risk reward ratio. So you risk $1. If you're right, you make 5. You know, if you're wrong, you lose your dollar. Not a bad gig. And you're above the 200s. So, you know, statistically, you have favor to the trend. So here we were taking bearish trades on the way down because we see red on the 200 exponential and simple. Here they're blue now. They have positive slope. We're above them. So probability is to the upside. Call it 60-40, 66-33, whatever. It's better than 50%. So if we have a high probability of success, we have a high risk reward ratio, and we use proper risk and position management. I mean, position size it up, right? Take enough of these, you know, take enough swings, you're going to hit a ball, so to speak. BAT, BAT, basic attention token. So we retested the 200 exponential. We put in a higher low, and now we're back testing again. You guys know that I am in this one here for this little breakout to the upside. Potential target 54% upside, potential stop loss 13.6%. If we lose that ascending slope line, if we get back below the 200s again, I'll probably just cut my losses here, wait to see do we break down or break out. And then if we do break back to the upside, you know, we can look for that 118%, that home run. But if we break back to the downside, we'll just reevaluate. We don't want to just get stuck holding the bag like, you know, all those crypto bros out there. Somatic, again, another one that we're long on at the moment, above the 200s, been relatively strong overall. We've had some real nice trades on this bad boy. And we got another one here on this ascending slope line here in green. This thing has been holding up the price one touch there, and then that was our first touch. We touch it again right here, had a nice little bounce. We're at it again. So we have this whole little cluster of support right here to hold us up. And if we do on a long enough time frame, we would expect this to push us up higher, potentially to that new high and the completion of this target, which is our 786 in white at $1.80. We'll see if it gets there. We'll start small for now. I expect a lot of resistance, about $1.25 at that previous high. But we're consistently putting in higher lows. This thing has been relatively strong compared to the rest of the crypto market. And it's above the 200s. It's in a bull market. We saw the trending slope line all the way down here while the histogram risen up here. Looks like it's ready to go to the upside. The 821 bull cross, very close to happening. Could push down here again and get one more stab to the downside. But it was very, very close to getting that cross and didn't quite confirm, unfortunately. But definitely still some potential in this one. So, and I'm sure there's lots of other good cryptos out there as well. Well, I mean, good crypto charts. Like the actual cryptos are probably trash, but the chart could look good. So gold on the daily, we've got quite a bit of resistance here on our first top, second top, third top right here. And I mean, this isn't just a coincidence. We literally ran into that top perfectly and found resistance. So the rest of the market, and I drew this on the monthly, that's why it's like drawn kind of weird, but ran into it perfectly. And so far, a little bit of weakness. We'll see what happens over time. You guys know we're expecting resistance around this area, around 2000. You don't have to be a freaking scientist to be like, hey, 2000 seems like an area people would sell their gold at, or maybe not. I don't know. Back above the 200, slope to the upside looks pretty good. Silver trying to push above that resistance. Got a little close up here now. Looks decent. I mean, silver looks better than it's looked for a long time. Now, what does that say about silver? Not much, because silver looks pretty trashy and pretty much has for like 50 years. So Nat gas here. So everybody's calling for nat gas to go higher. I mean, we're at the bottom of the range. So, you know, I got to agree with everybody. And then, of course, it did have like one more push down here. Under $2. I mean, just zoom back here. We look at the dinosaur days. That's when literally like everything was just fueled with dinosaur farts. What year was that? 2015. So back in 2015, the year of the dinosaurs, nat gas just traded inside this range for all the time. There was a tiny little time where it didn't underneath here. And then there was this little time when it went absolutely ballistic, when everybody just went full retard. And then now we're just back in that range we always trade in. So again, I would just assume when we're at the bottom of the range, you know, nat gas probably is pretty fairly priced right now at $2. It's getting a little expensive at about $3.50. So if you're going to buy things when they're cheap and sell them when they're expensive, I mean, grab some balloons and let's load up. Or however you buy the nat gas. I don't know. NEO is next. Not the trash crypto, the trash car company. So we had, man, I mean, this thing moved a little bit in our favor here, like, but broke down here. So we'll see. I'm not like ridiculously bullish on NEO or like China in general, but you could make a strong argument that, you know, this is going to be like the macro bottom. And to get like chopped out here, if this is going to go like way higher, probably not the best idea. But it happens sometimes. So we talked about like the best case scenario, and this thing goes to new all-time highs. But the little scalp didn't work out this time. So much like what happened with Tesla, we got taken out of that trade once right around the bottom, and then re-entered even lower, and then it exploded to the upside. Same thing. It's, you know, it happens sometimes. So the real question is, I guess, man, I like beat around the bush, but didn't even tell you what's going on. I don't know who else is in this trade potentially, but we're basically at the stop loss where we would normally exit. I don't really use like hard stop losses in some cases. In some cases I do. But in this case, I do not have just like a hard stop loss that just like exits me immediately. So we basically closed daily, opened a daily, and then closed the daily again at my stop loss. So I have the choice now to just cut and run, be done with it, or potentially risk, you know, who knows? It could gap down from here. It could just continually come down and we could lose a couple more percent. So we'll see. We shall see. But I'm hanging tight for right now. But also, you know, responsible position sizing, and you don't really have to sweat it. A couple percent. All right, so Alibaba, so much stronger, doing much better right here. This is working out much, much better for us. 39% upside here with that 13% stop loss was like a 3-to-1 risk reward ratio off the 236, headed to the 382. So we're very much on the way here, up over 20, I think it was like 25% right now from the entry right before that beautiful, beautiful gap up. 18%, I'm sorry. And then obviously we're looking for higher upside if this ends up being an inverted head and shoulders. And this looks very, very similar to the Dow Jones, actually. So, you know, maybe these major, you know, indices or, you know, companies, representations of economies, however you want to look at it, maybe they're telling us something here, you know, that maybe inflation's coming back and these things are bottoming out because actually profits aren't going to be that bad. And, you know, companies are going to keep raising prices, and, you know, countries are going to keep devaluing currencies, and feds are going to fed stuff. Which I think is a strong argument. Baidu, again, looking nice here on top of the 200s, bull slope to the upside. It is looking like it wants to come back down here and retest the lows again, but, you know, I got to look at these as buying opportunities. Now, could we get, like, just all of a sudden just smacked in the face and be wrong about being bullish on these things? Yes, we 100% can. If they all just start breaking down below the 200s and the slopes start flipping red again, you know, we exit our positions, you know, we lick our wounds, and we go about our life. But we can't just be like, I don't know, I don't trust it. There's something eerie about this. You just can't do that all the time. You got to just trust the system. And the system is blue, good, red, bad, blue, good. So blue, good. And, you know, every time we see a situation like this, sometimes you have a little fake out breakdown right here. You come back up, and then afterwards you go parabolic. So we're not going to miss out on the parabola because we're little pussies, okay? URA. Full representation of every uranium stock, nuclear just in general. This one chart just is all of them mashed together. Or no, that's not right. This is the Global X Uranium ETF. So it's got some stuff in here. I don't like this. I think it looks terrible. It's a giant descending triangle. You know, The uranium thing was fun for a bit. Everybody got all pumped up. If you got in early, you did real well. Congratulations to all those winners out there. But if you got in late, you've just been getting chopped up for like 2 years here. And, again, we're at support of this descending triangle, but I mean, we are squeezing it into the tip. Now you're like, yeah, right. We could go on the real tip. If you really want to touch tips, it's in December. It's on Christmas. December 8th, 2023. We touch tips, whether we like it or not. So maybe we trade inside the range here. But I mean, can you uranium guys just go one whole year with this just going sideways again, all in on uranium? I don't know. I don't like it. I think we're probably close to the breakdown and a nice like 20% haircut. So, but what do I know? Lulu, still don't like this big old air pocket right here. I mean, it's great because we're in the trade and explode to the upside, but I just don't love that at any point in time we get to see that gap down again. But again, I would look at that potentially as a buying opportunity. This is exactly what we saw happening right here. We broke out. It was like insane exuberance. And then we just straight gap back down here. And now when we gapped up on this one, we still left that big gap. So now we have like a double gap right here. So this thing's got to go to like 345 or something. A little pullback before we go higher. Obviously still in that one. That's our big trade setup. We did run into this descending resistance here on white, but the target is still 420. We'll just leave it at 420. It's technically 421, but for my boy Elon, that's his jersey number or whatever. I think he plays sports or something. 420. GME. What is this? GameStop? What the fuck? Is this some kind of prank? Why is this on my screen? I think we looked at this once and then somehow I just get pranked by it every time. This is what we're looking for. That's what it is. I left it up here to see this gap get closed potentially and what's going to happen. It had that gap up. It's like 18.5% down. You got to be really freaking careful with this thing. I don't like hate this chart. I mean, it went parabolic. It's trash, complete trash, garbage asset. Definitely going to zero. Consolidated sideways to down in this range forever. I mean, this is January 2021. And it's just been consolidating. This is actually a bullish pattern. We have an insane run to the upside, consolidate down, all the drama, and then eventually you break out and you potentially get that move back up to like $63, a 3x. Is it going to happen? No, GameStop's garbage. It's going to zero. It's trash. It's a complete trash company. Everything about it is garbage and a total scam. But, I mean, there's definitely arguably a trade setup there somewhere. But, I mean, you got to get it below that gap fill or above resistance. I mean, I wouldn't get it. It's just a waste of your money because it's trash. Okay, so ticker symbol, we looked at that one. Currently in this one, a little bit underwater for now. I think that's pretty much all I had for us here. We got those AI stocks. Got a little bounce off support like we talked about here. The 236 on AI. This is C3 AI. You got to be real careful on this one. It was a nice bounce off the 200 exponential and the 236. But I mean, that, you got to just assume that was just a dead cat after that ridiculous sell-off. At some point in time, probably going to touch that 200 simple. But I don't know. Again, everybody talks about this thing like it's some massive bubble or whatever. Like AI stocks are just ripping and roaring to like new all-time highs. And I mean, some of the AI stuff is decent, but like same down 87% still from the all-time high. So, I mean, potentially hypothetically speaking, this is why you buy trash. Is that if it ever goes back to that all-time high again, it's up 700%. So if you were up here and you lost all your money and then you hold it and then you get break even again versus if you just bought right now, 700% difference. The guy who bought here and held break even, the guy who bought here and it goes up 700%. I mean, it's probably going to zero, but the other end of that trade is 700%. So it's like not bad. So Soundhound came down, hit our support nicely. Didn't look like it was going to hold there and then rip back up to retest the 200s. It's in a cluster of support / resistance here. Doesn't look like terrible at the moment. Probably is going to test back to the downside. We want to see it put in a higher low when it does. Maybe this was it, but I don't know. I mean, that looked like just a reaction rally. I think it's going to come back down here and retest like under $2. And then BBAI. So got that nice little test down here to the 618. Left this big old gap unfilled though still. So we'll see what happens if this ends up being a lower high. I do expect this to come down here and fill the gap. But I'm going to look at that as a potential buying opportunity under $1 on this thing for another bounce back to the upside on the way to zero. It's definitely going to zero. It's trash. It's complete trash. I mean, there's people that paid $10 for this, and it's now worth $2.50. So down 75% once again. So, I mean, it's hard to call something a bubble. You could say it wasn't a bubble and it popped. You could say that it IPO'd during a bubble and it melted down, you know, or was extinguished or whatever you do to a bubble. You pop it. Yeah, you pop the bubble. AMD, so again, breaking above the 200s here. A lot of people feel like they missed out on NVIDIA. I think there's some potential here in AMD. You know, according to my buddy, Jim Cramer, I don't know if you guys know him. He's like a local guy. Looking at this like little 5-wave scenario though, and our top here, nice little trade setup. But realistically, what we're looking to see, you know, that played out beautifully, 30% upside on the breakout on AMD. Descending channel, 200 moving averages, all that good stuff. What we're really looking for is when and if it comes back down to about $83, $80, what kind of reaction do we get out of the market? And, you know, that to me is probably going to look like a buying opportunity, depending on what the indicator oscillators look like, at least for a pushback up, maybe just to a lower high. But, I mean, if we can scalp off the 200 simple and get like a back test, 15 or 20%, it's probably going to happen quick and should be able to capture a little bit of that. Potentially, we'll see. There's lots of opportunities open up here. I think people sometimes feel like when something pops off or there's a big move or trend or something and they missed out on it, definitely some people feeling like the FOMO lately on crypto. There's always another one. There's always another bubble. There's always something ready to pop off. There's always something in a bull market. There is never ending opportunity. The only thing is sometimes you have to look a little harder. Sometimes it's all right there in front of you and you can just buy anything. You throw a dartboard or, you know, pet a monkey and have him pick a bingo thing, or I don't know how they do all this, but, you know, get your goldfish to eat a pebble and then buy that stock or whatever Dave Portnoy does. That works in a bull market. But, you know, in a bear market right now, we got to be ahead of these trends. We got to pick them up as they're going before the momentum builds, before everybody gets into them. And this is typically what it looks like. Now, can this fail and roll over and go much lower? And then this was all just a macro top, lower high. And then, you know, we're down here at new lows below 55 on AMD very soon. Yeah, that definitely could happen. I would not be surprised, not one bit, if AMD comes down here to a new low. If we take from that low right here in 2018 to the macro all-time high, we literally touch a 236 in blue perfectly. We hit it perfectly. So we have an A down, a B wave up, and now we're expecting that C wave down. So, you know, let's just assume that we get, you know, relative C wave here to the actual A wave from where we just topped out. And let's just assume, you know, that was it. We would expect something along this trajectory, you know, and then realistically, if we're going to get that close to the 382, I mean, you know, we're going to touch dips with the old 382. I mean, that's one of our favorite spots. So, you know, does AMD go to $28 if shit gets nasty? Yeah, I think it does. But, you know, just as easily could it go to new all-time highs if inflation gets crazy and AI takes off and, you know, robots start doing robot stuff and people are like excited about it and the chips and stuff. I don't know, whatever the bull case is for like technology. I don't know. It's not really my thing. Yeah, so that was pretty fun. We nailed a bunch of assets. We got through pretty much everything in a nice amount of time. We got some bull cases. We got some bear cases. We got some short squeezes. We looked at GameStop. Obviously, you know, most of our retirement accounts are in that. I would assume. What's up, Bike Rides? Good to see you, brother. Fantastic review. Thank you, my friend. Thanks everybody for tuning in today. Happy Easter to everybody out there that celebrates. Happy just Sunday, I guess, to other people. But yeah, hopefully everybody had fun with their family, ate a good meal, hung out, rested, whatever the hell you're supposed to do on Sundays, because Monday is getting ready to kick back in. And I got a feeling we're going to see some excitement. Seeing the VIX at really low levels, seeing the dollar pretty beat down and everybody kind of one-sided on all the assets and everything. Going to be some big opportunity this week. May see TNX pop off as well, or maybe we see a massive breakdown and shit gets nuts. Either way, it's going to be fun. I'll see you guys on Wednesday, 8 p.m. Eastern Standard Time for the stream. I'll see all you group members in the private chat. We had a fun little weekend off, whatever, but time to get back to work. So that's it for today, Crypto Trend Trader, with our Sunday evening market look ahead. It is, what is it? 8:46 p.m. Eastern Standard Time. Man, that was quick. On April 9th, 2023. And I'm out of here.